if we are young. Leave up your head as we take on the wall. We are one, we are all family. Though tough times come, I will not waver. We will rise and become the new God. We will stand up and rise together. We will march into victory. Hold my hand and they say we know I do I, it's for you as it has been for me. Open your heart and know this in your soul. Our hopes, our dreams are the same. My walk and you, I will finish this race, not alone by myself, but with you. Though tough times come, I will not waver. We will rise and become the new God. We will stand up and rise together. We will march into victory. Hold my hand and they say we know I do I, it's for you as it has been for me. Everyone shine. All of earth there is for a reason, for a greater design. We will rise together. We will march into victory. Hold my hand and they say we know I do I, it's for you as it has been for me. We will stand up and rise together. We will march into victory. Hold my hand and they say we know I do I, it's for you as it has been for me.
Good afternoon, everyone. Welcome to our International Prop Chat on every Wednesday, 3 p.m. at FB Live. On behalf of IQI Global, Asia's biggest real estate investment agency, also a member of JUI IQI, I would like to thank everyone for supporting our program. Our sharing usually features some of the best projects in diverse hotspots around the globe. And if you like our program, which you think that is benefiting you, do invite and share it with your friends. Should you have any comments and questions, feel free to leave it at the comment box and we will revert to you shortly. Well, today I'm very excited because it's our pleasure that I managed to invite Mr. Melvin Koh, Country Manager of Benham Reeves, to share with us the 2022 UK Market Outlook and London Property Management Service. Without further ado, let me welcome Mr. Melvin Koh. Hi, Melvin. How are you?
Hi, Mandy. Thank you for having us, and it's a pleasure to be here again, as always. And happy to be sharing with regards to properties in London and what's happening in London for this past 2 years or post 2 years post-pandemic. I've done up some slides and also the collective data that we have over this past 2 years, pre-post-pandemic. And I'm happy to share with all the viewers. And of course, I thank the viewers for joining us. Yeah.
Yep. So for those viewers just join us, I would like to say hello to you all. All right. Well, today our guest is a very experienced person who is actually have many years of experience in promoting UK property, especially on the London side. All right. So today we'll definitely benefit a lot of insight information from Melvin. Okay. Without further delay, Melvin, the floor is on yours.
Thank you very much, Mandy. First and foremost, a little bit about Benham Reeves. I won't cover too much. We are a 65 years old company, and We have been in both lettings management and sales for 65 years in London. We have 20 over offices across London, Zone 1 to Zone 6. And of course, we have 8 satellite offices globally, assisting foreign landlords and, of course, local landlords who invest in London. So next, please, Mandy. Yeah, so today we're going to talk about London. I'm sure some of y'all are curious about what's happening. I understand y'all do a lot of international properties, similarly with Australia and London as well. So what I've put here is a beautiful skyline of London. And I want you to take note in your mind for now that looking at this photo, there's not, and if you realize, there's not many high rises or skyscrapers still in London, being one of the oldest city in the world. So I would just like to let this image sit in your mind, and let's be aware that there are not many skyscrapers in London as of yet. Next, Mandy, please. So today, we're going to be answering some questions. And of course, what's going to happen with the world, or what's going to impact the world, primarily impacting Europe, is not all hunky-dory. If you're going to invest, you also have to take a global view with localized knowledge. That's what we always say. So what we foresee now, and you can read all this in the news, is a supply chain squeeze globally, bringing up commodities, building materials prices, hence creating hyperinflation. This is very real, and this is already happening. You will see costs of materials going up, cost of property going up in the near future, cost of raw materials. And then, of course, you have the Ukraine situation with Russia, where there's a rise in energy costs. And of course, this is also impacting Europe. And with everything rising, you will also see a rise in interest rate from globally, whether if you're taking a loan from a UK bank, a Malaysia bank, or an Australian bank. And we will all need to also look at managing our finances, because all this is coming in the near future. I mean, people are expecting a couple of months down the road. And of course, post-pandemic, you're looking at a change of buying behavior, needs and wants of people buying property or wanting to live in a property. Maybe these days people are looking for more space, looking for more parks. They don't mind staying further out from the city. So these are little things that we look at. And of course, influx of migrants to London, this primarily to UK, having the situation in Hong Kong, having the situation in Ukraine. So we are seeing a huge influx of migrants coming in. And all this 0.1 to 0.7, which I've just summarized here, will impact the properties in London and also properties around the world. But having said that, the latest report of the Evening Standard on the right-hand side of the slide, it says that London house prices surge in property values as sales and enquiries continue to spike. So a little bit of data about London now. Next, please. 2021, or last year, or now up to this year, was an extraordinary year for house prices across the UK. UK house prices has increased by almost 10% over the year to January 2021 to January 2022. And if you look at this graph, it's a bit of a scary graph, I must say, because it just goes up and up and up, and it never seems to come down. Now, this is from the Office of National Statistics. If you look at the V in 2009 April, that was when the property price dipped because of the global financial crisis. But just as fast as it dipped, property price began to come up. And then, of course, in 2015, 2016, you don't see much activity there. It's a bit more tapered. It's because of Brexit. If you ask me when was the best time to buy, I would say back in 2008 when the dip was, and during the Brexit period. But then post-pandemic, because of the stamp duty holiday that was announced by the British government, the prices has spiked significantly. And maybe now that after the pandemic, people realize that they need a place to stay. So this has been spruced up by local buyers, international buyers. Anytime there is a crisis around the world, people will liquidate their money and put their money in properties in London. because it being a safe haven, safe laws, etc. Next, please. Mandy, next. Yeah. And of course, you have double figure house price inflation. Price has gone up, and over the years. And if you look at 2020 June, the spike of the inflation is the highest for the past 36 years. They said the spike has been highest. So that is the report now. Yeah, next, please. So the transaction is highest since before 2008, the financial crisis. No one expected a post-pandemic boom, but it did. No one expected people to rush to buy houses, but it did. So this is the current sentiment. What I'm sharing with you, the graph of what you're seeing is the current market sentiment in London and what is happening on the ground now. So these are all official data. You can get it online as well. Next, please. Yeah. Now, just now you saw UK transactions. This is London transactions. That means you're looking at London property price and the average price of a property in London now, whether you are in zone 1, zone 2, zone 3, zone 4, zone 5, or up to zone 6. Again, 2008, there was a V shape, although the V is not so much a V that is so significant. 2016, Brexit, but 2020 to 2021, the spike has been very significant. During the crisis, a lot of people moved out to the city. People thought that the city will never come alive again. The properties in the city would not bear value or would not hold value. But come when the vaccine was first initiated, what we are seeing is that everyone is returning to the city now. In terms of rent, in terms of sales, there's been quite a serious and big uptick, I would say. Next, please. Average house price, London versus the rest of the UK. This is from Zoopla. So if you see the rate section, it is primarily scattered in London. So I know a lot of people are going to the peripheral cities, Manchester, Reading, Birmingham. But if you have a pool of money, 600,000 that you want to invest, I would say London is still the best city to be in because of supply versus demand. The demand is overwhelming the supply. London today needs 83,000 more homes yearly, which it is impossible to build because of the strict planning permission, because of heritage laws, etc., etc. Yeah, next, please. This is just a slight indicator of the current cash rate or the low interest rate. It was previously 0.25 during the pandemic, but it is now at 0.75. They've raised it a little. So if you're taking a UK loan now or UK mortgage or an offshore bank, you're probably looking at an interest rate of about 2.8 to 3%. Malaysia banks do loan as well for properties in zone 1 to zone 3. So you're looking at interest rate of 3.7% for the Malaysia banks. Next, please. So what makes, and I'm going to go a little bit now into what everyone wants to know. What makes London London? And what makes everyone in the world, your billionaires, your millionaires, your top 10% or your top 1% in the world wanting to own properties in London? So what's so great about it? Of course, number one, they used to colonize the world. They written constitutions, they written the laws. You have very strong laws there that protects finance, properties, assets, businesses. So it is always a number one destination hub. So what we are seeing is that now London is a top European tech hub. Now, tech is very important post-pandemic because you have your fintech, you have your cryptos, you have your NFTs these days, and you need a smelting point for that. So London has become a smelting point for tech in terms of employment of tech workers. They are now employing more people than the Silicon Valley, which is in the San Francisco basin. Why London is because anytime they want legislation, because tech is something new, they need policies to be passed. They need to discuss on bylaws governing tech. they can just hop on to Westminster, meet the MPs, get it done, hop onto the tube, and they're back at King's Cross where their headquarters is. So this is very important. So there's a thriving tech hub now, and London is number 2 compared to San Francisco or the Silicon Valley. Next, please. So a little bit about the tech investments. As you can see, it's very real, and it's billions and billions and billions pumped in. So with all this lift of billions of pounds in infrastructure, similarly, migrants, talents will come. Similarly, property prices will increase because there's an increase in wages. There's an attraction of top talent. Tech companies want to attract the best of the world. There's big competition among themselves. And as you can see, we should be very proud of Apple's New London HQ, which is our Battersea headquarters. And I must say, I've been to the site. It's a very beautiful site, well done and well executed. And we should be proud that Apple is in our Battersea development, employing about 3,000 over employees. So you have an entire tech ecosystem. And of course, in King's Cross, you have Google's new HQ, which is as tall as the Shard. Shard is a very tall building in London, put sideways. So it is called a land scraper, not a skyscraper. Next, please. And of course, you have foreign investments, FDI, that is coming heavily into London now. As I said previously, anytime there's a crisis in the world, they will take their money away from somewhere and put it somewhere else. And where better to put it into London? The London cheese grater was bought by a Chinese tycoon for 1 trillion or 1 billion, sorry. And of course, you have the walkie-talkie, which was bought by the Lee Kum-kee family of Hong Kong. Now, this was all bought, mind you, post-Brexit. When Brexit happened in 2016, all of this, which I've said just now earlier, they went in and they snapped up all these billion-dollar properties. People think they're crazy, people think they're mad, but now in hindsight, it's not so crazy after all, right? Next, please. And people say that, oh, Brexit and all this is happening in the UK, the turmoil, or of course the pandemic, banks are shifting out, everyone is shifting out, doom and gloom and all that. But guess what? Once the Brexit treaty was signed, of course in Belgium, or the agreement was set, Shell decided to move their HQ, their entire operations from Holland to London. So a Dutch company decides to say, hey, bye-bye Amsterdam, bye-bye Holland, we are moving to London. And again, why? Because of the 5G infrastructure that's coming into London, because of the talents that stream themselves into London. Next, please. And of course, Citigroup bought its building during the crisis as well, 1.2 billion. Just recently transacted. Previously, they were renting. Crisis happened. They bought their building. Next, please. And of course, on top of the land scraper, Google bought another 730 million pounds of building. Then there's these are all the transactions that have just recently happened. So the total commercial value of real estate in London is at 4.1 billion pounds. You can see that, but the offer is at 5.8 billion pounds. So it tells you why they are just competing against themselves to outbid each other for all these commercial assets that is now sitting in London. Next, please. So a little bit of trivia: Google, Facebook, Amazon, Apple, Snapchat, together they are worth about 2.5 billion in terms of their investments in infrastructure and their offices in London. Next, please. And of course, Bloomberg, they bought their new European headquarters. McKinsey, Wells Fargo, Deutsche Bank, this all just recently transacted during the crisis as well, or during Brexit as well. Next, please. And just a aerial time view of when we say King's Cross, everyone says King's Cross in London. Everywhere you must buy a property near King's Cross. Why King's Cross? Because now it is Europe's largest tech hub. It sits right next door to the King's Cross station, which is a St. Pancras station, which the Eurorail comes in. So if you want to have lunch in Amsterdam, or you have appointment with a tech compatriot in Amsterdam, France, Germany. I don't know, Germany is quite far, but across the river or next door to where London is, or even up in Scotland, you just take the train, you go, you can come back, be back on the same day. So all this massive infrastructure, FDI that is pumped in, together with the lack of housing, is driving up the properties in London. And these are all real, as you can see. Next, please. So then on the eastern side, you have the Royal Docks, and this has been partnered with Asian counterparts, be it India and China. So this is going to come in a big way, where the Indian tech or software parks will come into the Royal Dock site, and it's being developed now. Next, please. Okay, so that is infrastructure. I think I've shared with you enough the amount of, you can imagine the amount of money in terms of tech, fintech going into London. Then of course, you have the UK economy. Of course, it rebounded by 7.4% in terms of GDP over the past years. The government did a furlough scheme in which that any employees during the pandemic, up to £3,000, the government will give you to pay your rent, to pay your daily expenses. So all this maintain the rental for all the landlords who invested in property, because people are still able to contribute to their rents. And during the crisis, out of the many landlords, I would say triple-digit landlords that we manage here in Malaysia, we only saw 15 empty apartments during the peak of COVID. Yeah, so rent still stood by, even in the city. People were still paying, albeit that we need to negotiate on the rent and come to a table and reduce the rent for the landlords and both the tenants as well. Next, please. So I've shared with you the graph. Next one. Skilled immigration is the new one. Yeah. When the Hong Kong crisis erupted with all the demonstrations, I'm sure you've seen on TV. Yeah. The UK government allowed 3 million BNO passports. Yeah. British national overseas, which is a right to a vote. For anyone who's born before 1997 in Hong Kong to come in and apply and immediately migrate to the UK. So we are seeing a huge amount of Hong Kong. We have 3 million. The entire population of London is 10 million. You have another 3 million people coming in. Now, these are Hong Kongers with money, with professionals, yeah, and highly skilled. So they need a place to stay, and we are seeing them now flooding into Hong Kong, flooding into peripheral cities as well. Next, please. So this is just a graph of the amount of BNO passport holders coming in, and as you can see, they are professionals, associate professionals, administrative, managing directors, and of course, the rest are business people. On top of that, you also have the Ukrainians coming in. I do not know how much Ukrainians have, but I think the more affluent would be have already stationed themselves in London with the current situation in Russia. Next, please. And very important, that glues the entire UK or London ecosystem is transportation. The Elizabeth line is a new line. If many have been to London, you will see that you have the tube sign, which is red and blue. You have the DRL sign, which is, I think, green or gray. And you have the overground sign, which is the British Railway. The next sign you will see, named after Queen Elizabeth, is the Purple Line or the Elizabeth Line. It's 25 billion super infrastructure connecting about 200 miles east to west, from Reading in the west, yeah, up to past Royal Eden Docks, past Canary Wharf in the east. And this will cut the transport time of London transport time by at least 30 to 40%. So it will get you anywhere from Canary Wharf to Heathrow in under about 45 minutes, escaping all the stops. But the beauty of it, it is merged with the tube lines. And I'll share with you shortly. Next, please. So these are just some of the stations that I want to show you all. It's brand new, high ceiling, 25 billion new infrastructures. If you go to London today, or in your next trip, you will see all these tube stations totally transformed with the Elizabeth line. Next, please. So it's a very familiar, if you go to London, you'll always see this westbound, eastbound platform, but you have never seen this purple line. So these are all the stops that they're going to stop, as you can see, um, from Reading down to Woolwich, yeah, down to Paddington Station. So everywhere is ultimately connected, even to the airport as well. Yeah, next one, please. So these are the trains, no longer the old tubes. It is because the olden tubes are too old, the infrastructure is a bit old, and they have no choice but to put in money to expand, to put in to cater for the pent-up demand of population and people commuting daily in London as well. Next, please. Okay, so this is just a trivia or a map of the Elizabeth line that will be added to your tube map from Reading on the far left or the west to Sheffield on the east. And if you can see the other color codes, red, green, these are the other tube lines. It will connect to Ealing Broadway, Paddington, Bond Street, Tottenham Court Road, Farringdon, Liverpool Street, Whitechapel, etc. So this will be an extremely fast train. And if you buy a property where the stop is a crossfield stop, then of course you will see a surge in property prices or surge in your property equity, because again, once the uplift of infrastructure comes in, naturally the uplift of properties will increase as well. Next, please. And on top of the Elizabeth line, you have the HS2 coming very soon. This is connecting the Midlands up in the north down to south of London. So if you can see, the grey line is Glasgow. You're down to Manchester, down to Liverpool. That is already active, and they're going to put in the high-speed trains. And of course, the new line would be the red and the yellow line. And these are all the infrastructure that's being pumped into UK or London right now. Next, please. These are some of the trains. Next, please. And of course, you have the 5G, and that's why it has attracted the top tech companies to be in London. And with that active talent pool, highly paid or highly salaried individuals, with an increase in salary, with an increase in wages, naturally rent will increase and landlords become happier, of course. Next, please. And you have world-renowned, it's an education hub. You can see that because there's a lot of animosity with China these days, a lot of countries are not too happy. China is sending more and more of their students to the UK. To a certain extent, UK has remained neutral with them. So we are seeing them going to boarding schools as young as 14, 15 years old, up to varsity these days. It's still the number one destination in terms of education. Next, please. And just to share with you how big education in UK is, this is Imperial College. Some of y'all might have gone to. Some of y'all know people who have went to there. Imperial College has expanded. Actually, it's not 1 billion. It's increased to 2 to 3 billion now. A new campus. If you can imagine, a college has 1 to 3 billion pounds to spend. That is the next level college that, of course, we don't have it. I'm not too sure whether we have it here in Asia. But that is the kind of serious money that education pulls into London. And of course, the students stay on, the student finds a job, and if they settle down there, they will need properties as well. Next, please. And finance hub, New York has overtaken London due to Brexit, but it's still number 2. Yeah, next, please. And of course, in terms of talent now, the British are very smart. Post-Brexit, everyone thought that because during Brexit, it is a porous, or what we call a porous borders. That means you can come and go as you please. But with Brexit, now UK coming out from the European Union, it's no longer porous. But what they have done is that they have now created visas or talent visas. If you're in tech, if you're in high demand, you can be fast-tracked. And for students now, if your child is going there, if your child is graduating from a UK university, automatically you can extend your visa for 2 years to find a job or to find employment. So what does this tell you? People can stay on, students can stay on, they don't come back. they continue on, they pay their rent, and if they want to find job, it also allows the student a breather. Last time they need to rush back. Now they know that, hey, at least I have 2 years to slowly find education. Again, this is retaining talent, and this is extremely, extremely important for the UK and London as well. Next, please. So supply and demand. London actually needs 83,000, although the mayor says it needs 52,000. Depends on what you give and take. No builders can build as fast as high. Remember, when we started, I asked you to look at the London skyline. It is still flat, considered with other top countries like New York, or cities like New York, Hong Kong, or even Melbourne. You know, you look at London being such an old city, it has a very flat skyline, and this is because you have certain London view lines that you cannot sort of block the views. They have very strict heritage laws that you cannot simply build. Yeah, there are many sites that were delayed due to finding artifacts underground, or even like Battersea was delayed because the hawks were nesting on the chimneys and they need to do it properly. So it's expensive to build in a city like London because of existing heritage laws and existing laws of the skyline, that you cannot simply build towers to block certain view lines of in London city itself. So, and all this has created a pent-up demand. And if you look at London projects, or you look at London developments that are launched, be it any developer, apart from the city center and, or I would say Canary Wharf, you will rarely see that it is high rise. So it continues to be low rise, it continues to be low density, and this is why there is a pent-up demand for properties currently in London as well. Next, please. Okay, so cost is going up, rent is going up. Average looking, if you're working in London now, you'll probably be spending 50% of your salary to 60% of your salary on rental. The rest goes to tax, and you have this remaining amount for food and for your entertainment, because rent is just extremely expensive if you want to be in central London, up to zone 1, zone 2, zone 3. Next, please. And of course, there's lack of property to rent. We are, as a lettings management agent in London, we are now looking for more stocks. Out of the many thousand stocks that we rent out, there's only 4 units unrented as last I checked. So you have amount of viewings versus availability as a scarcity of stocks. We sometimes get 14 viewings in a day for a property, not even a week. So these are things that are happening now in London. Yeah. Next, please. And of course, you have the strength of the currency, although it's still good, better than when those who bought pre-Brexit, the currency was 6 point something. So if you think to go into London property now, the property price, because of the war, the currency is still at 5.5, 5.6, or 5.3 last I checked. So it is still manageable in terms of currency. Yeah. Next, please. Yeah. And of course, UK, you have the safe and regulation and bylaws, or safe regulation and bylaws, meaning that in terms of the common law, you're protected. Anything happens, you can go to a court of law there. Similarly, like in Malaysia, to get hurt, to get a judgment, and to get yourself you can say justice, or to get yourself a hearing, at least in terms of what is happening. Yeah. Payment structure of the PEM properties, I'm sure you all know it's only 10% down or 20% down and nothing until completion. Similarly with Australia, financing, you can get financing globally, Malaysia, and all the offshore banks in the UK. And of course, it's a regulated market, meaning that it has the proper Tenant and Landlord Act, which Malaysia now wants to implement, and they're discussing about it. Actually, there's nothing much to discuss. The UK has the entire act. You can just take it, apply it, and I'll share with you shortly about this act as well. And of course, you have the credit and reference checks on all buyers as well as on all tenants. So if you want to transact anything in the UK, You have the AML checks, you have the proof of funds checks. Similarly, if you want to rent a place in UK, you have to give your background check. Where do you do? Where do you work? Do you have enough money to rent? And these are all called the reference checks with regards to doing anything in the UK. Next, please. So what I'm showing you now, if you would like to know, where if you, let's just say, have 600,000 ringgit in the bank and you would like to do something with it, don't come to us and say, I'm looking for a 2-bedroom in Zone 1, City of London or Kensington, and I want it at £500,000. It is really impossible. What you're looking at is the average house price for every borough in London now. And if you look as far as up north, Camden, Haringey, these areas, prices are already touching £800,000 to £600,000. Yeah, and of course, in more affluent suburbs, there are £1 million and above. So these are the medium prices. And if you look at the south of the river, it's always a bit more cheaper or a bit more value for money compared to north of the river. Traditionally, people want to be north of the river in London. Similarly to Melbourne, people want to be in the east, traditionally compared to being in the west. Yeah, so this is the similar demographics that we are looking at. Yeah, next, please. Price increased over the past year or the past 10 years. These are the price that have increased. So if you bought a property probably 10 years back or 15 years back, you will look at the property prices will have increased 3 times to 4 times, 300%, 400%, depending on where you buy, depending on when you buy as well. And if you can see, these are the boroughs that have increased. Up north has increased pretty much in terms of more than 400%. So actively, you will see that almost every borough in London is increasing in terms of capital gain over the past many years. Of course, if you look at the long-term effect, you would have preserved your capital. You would have someone is paying your rent. You would have gain on the currency as well. So there is multiplier effects that you can look at. Yeah, and this is some of the increase in terms of capital gains. Next, please. So these are real case studies or real things that we have achieved, and what we are seeing in London now, or what our customers have bought and sold. So if you look at the first one in Notting Hill, if you remember the movie Notting Hill, back in 2014, that was not 2 years, not too long back, probably eight years back, a one bed was £460,000. We have just recently sold it for £630,000, an annual rent of £26,000, with a gross yield of 5%. Yeah, if you've gone in earlier, back in 2014, you've gotten a higher yield because property prices were lower then. So if you did not take any cash and you took finance of probably 70-80%, your return on cash is 36%. With finance, yeah, or without finance, your return on cash is 123%. Yeah, so these are the things that you are looking at in terms of leveraging as well, using the bank's cash and ultimately selling out. In the UK or London, they have interest-only loans, similarly to Australia as well. They call it buy-to-let loans. So next one is in Tooting, similarly. And of course, you have in Stratford in the east, which nobody wanted. It was bought at £365,000 in 2015. Current value is almost £600,000. Yeah, annual rent was 23,000. He was getting a gross yield of about 6%, which is extremely good if you're in London. And of course, then you have the return on cash. If you just paid cash down, your return on cash is 60%. If you took loan and you come out with that small amount of deposit and you leverage on your loan, your return on your cash amount and that small deposit is 200%. You have Ealing in the west. If you look at Colindale in NW9 as well, back in 2008, the current value of the 2-bed was £450,000. £250,000 back in 2008, and now we sold it for £450,000. So you would have made easily about £200,000. These are prices of yesteryears versus now, and of course, if you were to go in now, you won't get the prices which you're seeing now, which is at 2014, 2015, because during Brexit, people always say, wait for the price to drop, wait for the price to drop, wait for the price to drop. Unfortunately, the price have not dropped. What we are seeing now is the rise of material costs. We are seeing developers now, in fact, raising prices in 3 weeks. I've seen developers raising prices by 3 times. I wouldn't fault them. It's because if they don't raise, they cannot build because the material cost is rising as well. Just an estimation of material cost rise, a container where I used to ship items, if you were to rent a container, it used to be 300 USD. Today is 2,700 USD to onboard something on a container. So you're looking at 9 times in terms of raw material costs, or not raw material costs, the container cost. So naturally, property price will increase. That's everywhere in the world. That's going to happen now or very soon. Yeah. Next, please. So if you're saying that, Melvin, if I have a little bit of money now, or where should I invest? I would always say that look at that property is just a tool. You have property, today you have all these other investment items as well, be it shares, be it commodities. So I always believe in investing in cash flow, a property that can generate cash flow for you. This is one of our units in the Green Quarter, which is in Zone 4, which is in South Hall, which is an area, if you say South Hall last time, it's filled with Punjabis, not to be one-sided in terms of ethnicity, but it's known to be a Punjabi area. So Berkeley, one of the largest developers, have built a scheme there. If you go in early, if you went in the first phase, yeah, your purchase price for 1 bedroom plus parking would have been about £357,000. This property was bought in January 2022, and the guy flipped it. It's actually one of our directors recently sold a similar 1 bed, third floor, 554. Asking price is now £420,000. So if you look at the short period of January completion, January 2022, until now, it was completed January 2022, but it was bought in 2020 or 2019. Please remember that, yeah. But you don't pay anything in between because it's 20% and 80% at completion. The asking price is now 420. So in that period of time, in that period of 1.5 years or 2 years, the equity or the capital growth is £70,000. So a build plus minus in terms of discount. So you're looking at a 10% increase in equity at completion. So if you have a pool of, let's just say, 600,000 ringgit, I would urge you to look at Zone 3, Zone 4 properties now. That is a first phase that the developer is just starting. You might get scared because you see, oh, there's nothing here, one. Oh my God, there's nothing. It's just that how everyone got scared when they went to see the Battersea development down in Battersea. Many stories about it. But you must believe in the developer, number one. You must have the vision to see what's going to happen when it's completed. Understand that, ask the salesperson if there's going to be surrounding structural capital uplift. Is the Crossrail coming? Are they putting in more infrastructure? Are they increasing the schools? What are the councils like? Are the councils or developers putting in more money to spruce up the place? How much investment is going into this area? Because then everyone would mutually benefit. Yeah. Next, please. Similarly, this is another unit. So if you want high yielding units, what I said earlier about investing in cash flow is that usually 1 bedrooms or a studio, or 2 bed, 2 baths. Yeah. 3 beds is more for own stay. Yeah, but the highest yielding ones are always your studio and 1 bedrooms, naturally everywhere in the world, because the entry price is lower. Investing in cash flow, meaning this property continuously generates you rent and cash. In London, I do not need to worry about rental. The tenant pays for my loan. The bank is happy because the bank knows that there's the tenant paying me and me paying for my loan. So the bank is double guaranteed because he knows that it's not just one person working to pay the loan. It's the tenant working to pay the rent, which I will then use to pay the loan, and also me working to pay the loan if the tenant don't pay my rent, if that makes sense. So in London, they have what they call buy-to-let mortgages, where the banks would loan, and banks themselves are willing to loan is because they are investing in cash flow. That means all this property, if you own 10, if you own 12, if you own 20, there's constant cash flow, and that's what the bank wants. So we want to be where the banks are, or what the banks want. And as time goes by, naturally, property would slowly increase as the surrounding area is uplifted, and that's when you sell. It's not speculative in nature. You don't buy today, sell 5 years down the road, because a lot of people want to buy the same place. It's just like in KL, if everyone wants Desa Park City, everyone wants one Menorong, then that's why the price go up. But generally in London, it is always looking at how the local area, local councils are involved with the developer to uplift the space. Yeah, next please. So a little bit about stamp duties. I wouldn't bore you with this, but naturally now UK has also put in a foreign stamp duty surcharge of about extra 2%. So naturally, a property of about £500,000 to £700,000, the stamp duty you pay is about 7 to 8%. Still comparatively low compared to countries like Singapore, which is about 30%, yeah, or Hong Kong, yeah. And of course, you have naturally the other taxes of income tax if you rent it out. But then again, all taxes are tax deductible, and you get a tax allowance bracket for Malaysians as well. So if you want to read up on this, I can send you the slides. I wouldn't touch too much on this. Next, please. Yeah, and of course, for those who wants to know process of managing and letting a London property, I'll just cover this quickly. Next, please. Yeah, and 1/3 of London households will live in private rental accommodation. This is a prediction that's going to happen soon, and it's already happening. Generation rent. Londoners will be 60% of Londoners will be renting a property by 2025, and our increase in transactions of lettings is up by 31% from last year, and record number of buy-to-let. Again, this is locally buying, foreign money pouring in, bought by institutions, bought by REITs. Now you have a very big thing of buy-to-let. Sovereign funds, investment funds are all buying blocks. Some go as far as student accommodation, but that is another story. So what do they want? They're all investing in yield, in cash flow. So this is something that London does provide and London generates. And we help, next please, and we help to assist everyone by doing this. But first and foremost, I told you about the Landlord and Tenancy Act just now. If you Google, you go online, the Landlord and Tenant Act 1985, you will see that it is a very comprehensive act on the rights of the tenants, on the landlords. Malaysia, recently, there's a big debate about this. They ask all the rents, all the PAs, all the estate agents to come, sit, give your ideas. I do not know why they do that when the act, which is working in UK, London, such a sophisticated society, is already there. But maybe they want to adopt it to a more Malaysian climate, so they're asking for feedback, or they just need to out of politeness. And then you have the tenant deposit scheme. There was a saying that the Malaysian tenants deposit will be held by the government. Everyone came up with a big hoo-ha and say, oh no, the government's going to take our money, blah, 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 blah. Actually, it's similar. The tenant deposit scheme, it is semi-government. That means it is arbitration. Similarly, like Perkeso, if you have any issues with employees and all that, you don't go to the High Court or the Magistrate Court anymore. You go to Perkeso. They have their own courts there, and they will arbitrate. Same thing here. So it is very comprehensive. It is very well regulated, and everyone knows their rights. So that is why money is pouring into London. It's because of the strength of the laws. And then, of course, you have the Tenant Fee Act. They just recently enacted 2019, which states down how much a tenant should pay in terms of the miscellaneous, whether it's cleaning, inventory checks, etc., etc. Next, please. Okay, so this is just our end-to-end property service, which I won't touch unless you all like to know more. I'm happy to talk to you all individually because it's an entire process by itself. But having said that, there is proper credit referencing, credit checks. Similarly to Australia, you have your tenants database. Again, contracts are governed by the Landlord and Tenants Act. Deposits are governed by the TDS. We manage the day-to-day issues. If your tenant has any issues, you don't speak to them, you speak to us, and we will manage the day-to-day issues. And of course, we submit the tax returns as well. Next, please. Okay, that's about it. And this I've touched. We have 60 years, 65 years in London now, 20 branches and 8 international offices. Yeah, next. That's about it. I hope my session was informative. And if you have any questions, I'm sure you can refer it to Mandy, and I'd be happy to answer all of them. Thank you. Can't hear you, Mandy. You're on mute, Mandy.
Wow, okay, it was great. I mean, very insightful information from Melvin. Of course, we have quite a number of questions for you. Okay, let's start. Are you prepared for it?
I
Okay.
hope so.
Okay, in January, because we agents, right, we always like to do investments, and especially you talk about UK. I mean, with your experience, right, among the locations, where is the hotspots? I mean, for agents, and when you talk about invest in London, especially, or any cities that is out of London.
So the question is, do they want to invest in London or do they want to invest out of London? It's two
Where
different.
is the hotspot? In fact, what is the hotspot?
Hotspots would always still be in London. Yeah, depends on your budget, I would say. My rule, which I've invested in London, and what I've done is I look at new schemes that are near to city, not so near to city, zone 3, zone 4, that is fine. That's number one. Number two, it has to be the first phase or second phase of a master plan that is coming up. That means you go in early. That means you might be going to just looking at the developers of the plan. Yeah. Thirdly, something that you can afford, of course, if it's averaging about 400, 300, 400,000 pounds, or a two bed is below 600,000 pounds, then that is the sweet spot. Sweet spot, not to say hot spot. There are many hot spots. Hot spots can be in zone 3, zone 4. You don't need not so much of a hot spot, because as long, like I said, as long as you're near a crossrail, as long as you're near a tube, yeah, or as long as you're near a tech hub, these are the properties that would, number one, rent very well. Number two, would be highly sought after post-purchase. That means when you exit. Remember, there's also a cost of purchase. Remember, there's also a cost of holding the property. I'm sure everyone loves to buy, but when everyone hates to pay, or when it's painful to pay, you know. So I would generally say hotspots are a bit difficult because it depends on your budget. But if I were to say what are the hotspots now in London, I would say not in the city centre. I would say it's zone 3, zone 4, where it's next to parks, is next to water features, is next to waterways. Because again, I've covered just now, post-pandemic, people are looking for apartments with balcony, apartments with a view of greenery, apartments where they can come down and can take their jog at a park, you know, or a reservoir or a water feature. So these are things that they need. Yeah. So if you look for developments like that, you would naturally do well. Sit on it for 5 years, and it's good. So apart from London, I would say the next city would be Reading, if you have a little bit of money, Birmingham, or even Slough. So these are cities to look at. Yeah.
Okay, so
Yeah.
when just now you did mention about zone 3 to 4, what sort of rental use that we can
Zone 3
expect?
to 4 would generally generate you about 4.5% gross yield for a
Mm-hmm,
studio, and a one
mm-hmm,
bed. A two bed, two bath would be at least 4%, or maybe 3.9, 3.8. If you go into zone 1, sometimes it's lesser than 2% because the entry price is extremely high.
mm-hmm.
Yeah. Yeah.
Okay. And right now, a lot of people was just wondering, is like when they come to invest in London, especially, should they go for studio or one bed or two bed? I mean, of course, it depends on the budget as well. But a lot of people were concerned about what is the exit. Will that be easier to exit if they were to buy a two-bedroom or versus the studio? What is your opinion then?
Okay, there's two ways to view this, of course. Um, in terms of an exit plan, we have sold one beds. We have also sold two studios in the subsale market. But I would say a two bed, two bath would always have a higher room for capital growth because that jump, if you buy something at, for example, 550, a two bed, two bath, it
Mm-hmm.
has the potential to grow up to 800,000, for example. But if you buy a studio at, for example, 350,000, probably it has the potential maximum to go to 450, 480 because of its size, right? So there are limitations to studios and a one bedroom in terms of capital gain, but a two bed, two bath will always have a bigger um, uplift. And if you want a two bed, two bath, always try to get a car park because car park is now a scarcity.
Mm-hmm.
Every car you own needs two car park, one at home, one in the office.
Mm-hmm.
Yeah, but you only need one house to stay. So every car needs two car park. So London is trying to stop creating more car parks. So car parks would be a high value item in the future. Yeah. So Um, but I would say a two bed, two bath would be a better bet if you like a higher capital growth. A smaller apartment is always for the yield and the cash flow.
Okay, but in generally in London, right, especially you talk about zone one to about zone two, right? Car park is like is not come together with the package, even though you would have bought a two-bedroom, right? Am I right to say that?
Yes, yes. So it's a right to park that you need to buy extra. So if it's zone one these days, it can go up to I don't, about 70,000, 80,000 pounds. That's cheap because if you're to buy a car park in Kensington, I mean, prime areas these days, it can go up to 250,000 pounds to 300,000 pounds for a car park. So I would say it's a good to have. It's not to say a must have, but if you
Mm-hmm.
can afford it, then of course get a car park. Yeah.
Okay, good.
Mm.
All right. So then a lot of people was sort of like comparing, okay, especially Hong Kong, they would like to buy a house instead of apartments. So in this case, as we know that in London, especially you talk about even from zone one all the way from zone three, right? It's probably hard to get those house developments
Yeah.
going on, right?
So yeah, so you can look at peripheral areas. Some of them are buying houses in Reading, some of them are buying houses in Kent, some
Yep.
of them are buying houses in Surrey, some of them buying houses in up north, further out. So yes, if they want houses, then they have to go further out because you just can't afford. Not every Hong Konger is a mega millionaire. A lot are still professionals. But if they want good employment, so it's a way between comfort and convenience, I would say. So, but every Hong Konger's dream is to own land and to own a big house, of course, from where they come from. But having said that, a two bed, two bath is bigger than any apartment in Hong Kong. I would safely say that. So yes, also remember if you invest in a house, there's more upkeep. The house is bigger, there's higher energy bills to pay. This is monthly, ongoing. There's more electricity. There's higher council rates because your unit is bigger. So all this you have to take into consideration. Yeah.
Especially when they work from cities, the traveling costs, all this will be included as well on the
Yes.
money
Yes.
expenses.
So correct. So apartments are still appealing in London because you have no choice but to live in an apartment. You know.
Okay, and there is one of my clients that asking me that is there any freehold property in UK or I would say
Yes.
in London?
Yes. You buy a landed home, it's usually
Mm-hmm,
freehold, or you
mm-hmm,
buy a property or a period property, you can have a share of the freehold. That means you are a freeholder. That means there's no, you're not the leaseholder. Yes, definitely there is.
mm-hmm.
It's just
But it's
more
not,
expensive.
yeah, it's not very common, right?
It's not very common because the most of the new builds are in leasehold, either 999 years or 250 years. You know, yeah, but
Okay.
the freehold properties you usually buy the entire stack of. If you see the properties in London, the entire stack of the terrace, then
Mhm.
you'll become a freeholder, and you can do whatever you want with the property. Um, or landed homes as well. Further out, you can and get freehold property as well, but you must search locally there.
Okay, understand.
Mm.
Okay, there's another question was saying that if let's say a foreigner who's holding a working visa, when they buy a property in London, can they enjoy the local stamp duty?
He holds a working visa.
Yes.
He's a UK resident. Yeah, if he's staying there, then he can enjoy the local stamp duty.
Or just a working permit? No, right? I don't think so, right?
No, no, as long as you're staying there,
Mm-hmm.
and if the place of residency,
Mm-hmm.
you have to live in it. You just declare. Actually, I wouldn't say this so publicly, but it's at the end of the day, it's up to you and your solicitors to let them know. Your solicitors would then advise you, of course, but you are considered a UK resident.
Oh, okay.
Hmm. Yeah,
So for
so you
anyone
can.
who have who have these questions, and probably you can
So you're
actually
physically
PM
in the
us.
UK. You're staying in the
Yep.
UK. The question or not whether you fly out next time is irrelevant because it's at the point of signing, right?
Yep. Okay. So anyone need
So,
further
so
detail or
I'm sharing a
further
hint there.
answer? Yeah.
Yes,
So
yes,
PM us.
yeah.
We will
So
actually answer it accordingly. All right. All
correct,
right.
correct, correct.
So okay. Then a lot of people were saying that because you did mention that buying properties in UK you can flip. Okay. But in your advice, right, or based on your experience, right, I think UK property is to you is like it's more on the short term or long
Yeah,
term
it's a
investment.
long-term game. I mean, to flip it is just very, very rare opportunity. This one came about is because of the sudden spike and the stamp duty holiday, and someone wanted it, and the developer had no more stock. So all these conditions put together, then someone wants to buy from you, then okay, yes. But naturally, if you're just investing, I wouldn't want or advise you to invest on the basis of flipping. I would advise you to invest basically personally I invest also is because to preserve capital. What do you mean by preserve capital? You have 500,000 sitting in the bank. It's inflation, it's going to lose its value. You change it, you put it into a UK London property. It generates yield for you better than the FD. If the FD rates continue to be at 2-3%, if you are going at a high yield area, you enjoy the currency uplift if it goes up. You enjoy the capital gains if it goes up. But worst to worst, your 500,000 holds its value in 5 years down the road. True value meaning 5 years down the road, 800,000 is our 500,000 now. So, I mean, things like that. So I would say it's more of preserving capital and also making the extra amount of equity in the near future, but never a flipping game. Yeah, flipping game is more for a speculative market. Mm.
Okay, understand.
Mm.
Okay, just now you did mentions about the new scheme such as like those regenerations kind of location. In fact, that is actually the better projects that you could actually invest and look into, right?
Yes, but try to go in at the first phase. Like I always say.
But like you say, a lot of people will look at the first phase like, oh, there's nothing there, and it's so
So
empty and all these
that's
things.
why
People is
it's
just
it's a
worried
risk and
that.
return, So if you go in and everything is built, you like the area, then you pay more. You see, but when I take the risk upfront, I support the developer. Support would not be able to do it. I believe in the developer can produce this after studying the developer's portfolio, for example, or the developer has already done so many cases like that and has a good reputation. Then you go in early, you reap the rewards as the master plan continues, the infrastructure is put in, the property price slowly go up. So that's the meaning of regentrification, because the local government or the councils in London need the help of developers to come in and spruce the area up so that there is no ghettos like the US, for example, where
Mhm.
you have just ghettos and all that. So, and social housing or affordable housing or first home owners buyers units can be absorbed into the master plan development as well. So then you have a good creation of township and master plan, and this is something that the UK has done very well. Yeah,
And
like I said,
in fact, it's very successful. I see some of the regenerations projects
yes,
and
you look
everything.
at Elephant and Castle, where they say it's an area that's not so nice, a lot of
Yes.
crime. You look at Clapham, you look at Hackney. I mean, these are areas that you might not have heard before, but in the olden days, you wouldn't want to go near there. But again, with money, infrastructure pouring in, that's when property prices increase. Yeah,
Yep, especially you talk about the whole master plan, it will take about 10 to 20 years. And by the
correct.
time, imagine you would to buy at a phase one or phase two.
Correct. I mean,
So,
there is no risk-free investment. I would say that you have to still do your homework, and I wouldn't say everyone makes money from every investment, but I think if you go in early, go into a good developer, wait for a while, as long as the property is rented out, most important thing is the property holds its value at the end of the day.
yep. Okay, I think time's a bit running out. Okay, I have last
Sure, no
questions for you.
worries.
So, if a father wants to buy for the children, can he get the loan for a property under the children name?
Is the children above 18 years old?
If it's yes, no problem, right? Even though without any income.
So only Malaysia banks do the guarantor method. That means if the children's name, however many children, the two children, let's say for example, then the father and the mother can be the guarantor. But for UK banks, the name in the contract must be the name in the loan, or any offshore
Oh,
banks. Yeah, yeah. You don't have the guarantor concept for the UK banks, and but CIMB, Malaysia, they have the guarantor concept. Yeah,
okay.
yeah,
So I
yeah.
think right now in terms of the mortgage finance is probably if you talk about UK loan is about 70% to about 80%, right?
Yes, at 3.6, 3.7%. That's the Malaysia Bank's rate.
Mm-hmm. And Malaysia will be a selective location, maybe just up to zone three, right? Anything else, they probably.
Yes, yes, yes. So Malaysia banks do up to zone 3.
Okay. I
Yeah,
think that is great. I mean, thanks a lot, Melvin, for your
no problem.
insightful informations.
Yes,
And on behalf of IQI Global, I would like to thank you again for all
thank
these
you so much.
informations, and we definitely benefit a lot. So for those who still have questions for Melvin, perhaps you can actually PM us. We will
Yeah,
actually connect you with Melvin. Okay. Should you have any more questions with regards to uh, UK market. All right. So do stay tuned with us. Okay. If you miss any of our episode, do join us at Facebook Live or YouTube at IQI International Sales. And don't forget, if you like our program, please share it with your friends and families. And don't miss our next few episodes, as this whole month we will focus on UK. Predominantly on London. So next few weeks we will feature some of the um, interesting projects in London as well. So stay tuned with us. And meanwhile, I would like to wish Melvin all the best. Take care
thank you so much.
and have
Thank
a
you,
great
everyone.
weekend. Yeah,
Thank
thanks
you,
a
thank
lot.
you.
Bye
Bye.
bye.
Bye.